Okay, so let's continue with Ifrs 13 fair value measurement. So in the first video, we looked at um, how to identify the principal market and the most advantageous market. We looked at characteristics of market participants and we learned how to determine fair value, right? We said fair value is equal to your selling price minus your transport cost. We looked at those ones and then we solved some questions, right, on the computation of fair value. So if you've not checked that, check the second video for the calculations. In the second video, we did practical questions. We solved some practical questions around 5, 6 questions, if I'm right. Right? Now here we are going to continue with the highest and best use. So how do we determine fair value of non-financial assets? Right. So let's continue. We are going to look at application of fair value to non-financial assets. Right. Okay. So financial assets include your cash, your contractual right to receive cash, which is like receivable, and investments in what equity shares. So when you invest in equity shares, when you buy equity shares of a company, when you invest in equity shares of a company, it's a financial asset to you. You are purchasing shares of a company, so that gives you an asset, and it's a financial asset, right? Okay. Then we have non-financial assets, which includes our property, plant, and equipment, and what intangible assets. So you have your land, your building, your motor vehicles, those ones, and then your intangibles, trademark, your patent, okay, your copyright. Those ones are what non-financial assets, right? So that's it. We have the financial assets and then the non-financial assets. And what we are looking at here is the application of fair value to non-financial assets, right? Okay. Now let's continue. How do we determine the fair value of a non-financial asset? We determine the fair value of non-financial asset using the highest and best use. All right. So don't forget that we determine the fair value of non-financial assets using the highest and best use. Now, what's highest and best use? The highest and best use refers to the use of a non-financial asset by a market participant that will maximize the value of the asset. All right. Or the liability. So we are looking at the value. Okay, we are looking at the use that will maximize the value of the asset or group of assets or liabilities, right? Now, for example, let's say you have a plot of land that you can use for farming, and then you can also use for, let's say, for residential purposes. Maybe you can put up your building there for residential purpose, right? Now, what the highest and best use principle is saying is that you determine the value of the land for farming, determine the value of the land for residential purposes, and pick the higher one. So the higher becomes the highest and best use. All right. If you have 3 or more uses, then the highest becomes what? The highest becomes the highest and best use. So we look at the use of the asset, okay, in various instances, and then we select the higher or the highest. If you can use the land for farming, for residential purposes, for industrial purposes, just look at the value, look at the fair value of the three, and then the highest is what you're going to use as the highest and best use. And that's how we determine fair value of what? Non-financial asset. So let's say if you are using the land for, let me wipe this thing here. If you are using the land for farming, right, let's say the fair value is 50 million. For residential purposes, 70 million. And then for industrial purposes, 80 million. You see, here the highest and best use becomes what? Or the highest and best use will be what? 80 million, which is what? This one. And therefore, that is the fair value. So you see, for farming, 50 million, for residential purposes, 70 million, for industrial, 80 million. So the highest and best use is the 80 million, which is what? Industrial. So that becomes the fair value. So that's how we determine fair value of what? Non-financial asset. We look at the use that will maximize the value. Simple as that. And in determining the highest and best use of a non-financial asset, we take into account the use of the asset that is what physically what possible, We look at it being legally permissible and financially feasible. So what is the physically possible, right? Physically possible looks at the physical features or the characteristics of the asset. Okay, so we look at the physical features or the physical characteristics. Okay, that market participants will take into account when they are pricing the asset. For example, you look at the sorry, you look at the size of the asset, the shape, the location, the topography. So physically possible, look at the physical characteristics, the physical features. Is everything functioning well? And we look at these things when you are pricing the asset, because if you buy an asset, I'm very sure you will look at the physical features. You don't only look at other features, you look at the physical features, right? The physical characteristics, right? So that's the asset being physically possible. Now we also have the asset being legally permissible. Now, legally permissible has to do with legal restrictions. Okay, so is there any legal restriction on the asset? We look at these things. A use that is legally permissible takes into account any legal restrictions on the use of the asset that market participants will take into account when pricing the asset. Example, the zoning regulations applicable to a property. So, we have certain types of assets that cannot be used in certain areas. For example, in certain locations, you can put up a factory. All right. So if you can't put up a factory, then it is not legally what permissible, and therefore you can't determine the fair value of that land using what the value for factory, because it is not legally permissible. So once again, you have a piece of land, and I'm saying you can use the land for factory, but you realize that in that area you can't put up a factory. So let's say it is there. Let's say it's legally prohibited. Okay, banned legally for you to put up a factory there. In that case, it is legally what prohibited, and you can't put up a factory, and therefore you can't determine the value of the land using the value for what, for the factory, right? Okay, then yeah, so that's the legally permissible. We are looking at the legal restrictions. So let's say you have a piece of land, you can use the land for farming, and then you also put up a factory on it. For farming, the fair value or the value is 50 million. For factory is 70 million. I realize that it's prohibited, the land is prohibited, okay, from being used as a factory. In that case, we are going to cancel this one out, and we can use the 70 million as the value, okay, as the highest and best use, because it is legally prohibited by law. Okay, there's a legal restriction, and therefore we have to use the 50 million, even though the high is 70. The 70 is prohibited by law, and therefore we can't use it, right? Okay, so that is the highest and best use that's the highest and best use. All right. So okay, so that's it with the legally permissible. With the financially feasible, we are looking at the asset being able to generate enough cash flows. All right. So a use that's financially feasible takes into account whether a use of the asset that is physically possible and legally permissible generates adequate income, okay, or cash flows. So the financially feasible looks at the asset being able to generate the enough or adequate cash flows. Therefore, before you price the asset or before you buy the asset, you have to look at the asset being able to generate adequate income or cash flows. Yes, before you buy whatever asset you want to buy, we look at this. All right. So that's it with the three. Legally permissible talks about the legal restrictions on the use of the asset. Okay. Then physically possible looks at the physical features or the physical characteristics of the asset. Financially feasible looks at the asset being able to generate enough income or cash flows. okay, for the entity buying the asset. And here, IFRS 13 says a use can be legally permissible, even if not legally what approved. Now, what do we mean by that? You see, let's say you have um, a piece of land that you can use for farming, okay, as well as um, for your residential purposes. All right. Now, let's say you have not yet obtained permission for the land. So there's no permission for the land, okay, to be used as uh let's say residential purposes. So IFRS 13 is saying even though permission is not granted, we can still use the asset. We can still determine the highest and best use, okay, yeah, from this value. We can still look at the residential value when we are determining the highest and best use and when we are determining the fair value. Okay, so the fact that permission has not yet been granted, okay, for the land to be used as residential purposes doesn't mean it's not legally approved. I mean, permission can later be granted. Okay, what we are looking at is there a total ban, okay, on that asset? Can the asset, if the asset can be used but permission is not granted, we can still go ahead and take that value into account when we are determining the fair value. But in the case where the asset is totally banned, is totally prohibited, for that one, there's a legal what restriction. Okay, so you see a question where they tell you that okay, permission has not yet been granted for the use of the land for farming purposes. Then they tell you the fair value of the land for farming is 50 million, residential is 70 million, right? Even though permission has not been granted for farming, you can't say because permission is not granted, you are not going to consider the value of farming or the value of the land for farming when you are determining the fair value. No, you have to. Okay, it's only when it is totally banned that we cannot determine or we can't consider the value when we are determining the fair value. That's what it's saying here. That IFRS 13 says a use can be legally permissible even if not legally what approved. It will be approved someday. We are looking at the total or the partial and sorry, we are looking at the total ban. We are looking at the total ban. If it's totally banned, we can consider that value when we are determining the fair value. Okay, so let's come here and then look at some questions. Let's solve some. Question 4. Question 4 says CN Limited acquired a plot of land developed for industrial use as a factory. A factory with similar facilities and access has recently been sold for 50 million. Similar sites nearby have recently been developed for residential use at site for high-rise apartment buildings. CN Limited determines that the land for residential use at a cost of 10 million to cover demolition of the factory and legal costs associated with the charge of the change of use. The plot of land would then be worth 62 million. Therefore, determine the fair value of the asset. So here we have a piece of land, and a piece of land is a non-financial asset. So we are going to determine the fair value using the highest and best use. And the highest and best use is saying to get the value or the fair value of a non-financial asset, we look at the use of the asset in the various circumstances or in the various instances, and then we pick the higher. Okay, so if you can use it for, as I said, for farming, for residential, for industrial purposes, look at the fair value if you use for farming, fair value if you use for industrial, fair value if you use for residential, and pick the higher, provided it is not what it is not legally prohibited. Okay, so you consider this and you select what the higher value, and that becomes the highest and best use. So here, if you look at the question, we're told that we acquired a plot of land, okay, um, and that plot of land is developed for what industrial use, okay, and he said a factory with similar facilities and assets has recently been sold for 50 million. So what it means is that if you use, so this is how we're going to do it. So let me say question 4. So question 4, so value of land, okay, if used for industry or if used for factory, is what? 50 million. So this is a fair value if used for what? For industry. Okay. So let me write on top here. So for industry, the value will be 50 million because similar lands or similar factories in that area have been sold for 50 million. So that will be the fair value if used for industry. Then they said they can also use it for what here? For the land can also be used for what? For residential purposes. Yeah. Okay, so we can also use for what? For it here for residential purposes. So we have to also write we can use for what? For residential purposes, meaning we can put up things and stuff. So for residential purpose, they said that if it's for residential purpose, the value of the land will be worth what? 62 million. But we will incur 10 million cost, and that's demolition. So maybe yes, you have a land you're using for factory. Now you want to change it from factory to residential. Maybe you need some cost, you need some machines or some caterpillars to pull down and then pull down the buildings and then clear the site so that you can now use it for your residential. So you are going to get 10 million cost, and that cost is to cover demolition and other legal costs. So what I'm saying is that for residential, the fair value will be what? 62 million. But there will be associated cost of 10 million. So we less that 10 million. So for residential, it will be what? The fair value 62 million minus the demolition cost 10 million. And that will give us what? 52 million. So note that this is a principle, and you have to put that down. If there's any associated cost of the change of use less, what I say? If there's associated cost, let me write it so that you put it there. If there's associated cost of change of use, you less from the fair value. If there's what? Benefit, you do what? You add. We'll be solving complex question. This question 5 like this has some benefits element. So we will work that one out. But note that if you are changing from, let's say, factory to residential, residential to factory, and there will be cost, associated cost. What the standard is saying is that we have to less the cost if there's a benefit to add. So here I've less the 10 million demolition cost. But if you use it for residential, it will be worth 62 million. The land will be worth 62 million. But we are going to get 10 million cost. So we have to less that 10 million. So you see that for industry, for industrial use, 50 million. That's for factory. And then for residential, 52. So therefore, the highest and what best use is what? 52 million, which is what? Which is the residential use, right? So therefore, the fair value is 52 million. And that's the highest and best use because you compare the two for industry and then for residential, and then you pick the higher, and that's the fair value. I told you, don't forget any associated cost is less, benefits are added. Let's look at question 7. We'll come back to question 5, but let's look at question 7. Question 7 says GPI purchased 100% of the ordinary shares of Three House and is trying to determine the fair value of the asset at the acquisition date. Three House owns land that is currently developed for industrial use as high rise as apartment buildings. The land owned by Three House does not have a planning permission for residential use, although permission has been granted for similar plot of land. This is what I'm telling you. So my question here is that is there a legal restriction? There's no legal restriction. The plot of land, okay, doesn't have a plan, doesn't have permission for what? For residential use. But they are telling you that other buildings or other lands, similar lands have gotten the permission. So I told you it's not legally what banned. We'll get back to that here. The fair value of three halves land as a vacant site for residential development is 6 million. However, transformation cost of 0.3 would need to be incurred to get the land into this condition. Required. How should the fair value of the land be worth determined? And we said again that land is a non-financial asset. So we determine the fair value using the highest and best use. Now, they are telling us that the land is currently used for what? Industry, even though we don't have the value if it's for industry. And they said we can also use the land for what? For residential purposes here. Can be used for residential purposes, although they've not gotten permission. So the question is, can we go ahead and use the residential value as the fair value? It is yes. Why? We're told that permission has been granted for similar plot of land, and therefore it's not totally banned. We can get permission. That's why we said the standard says that if you come here, let me bring you back, then we continue. Here, it says Ifrs 13 says here, a use can be legally permissible even if not what approved. So here we can say that yes, it's not approved yet, permission has not been granted. But it's not totally banned. Similar assets have gotten the permission, so we can also get it. So it's not legally what banned, and therefore we can use the land for what our residential purposes. All right. So just pick the value fees for residential. What's the value? 62 million. So we pick the fair value if used for residential purposes. So the fair value will be the 60 million, the 6 million minus the cost 0.3. This 0.3 cost, I told you associated costs are deducted and benefits are added. So if you less, you get 5.7 million, and this becomes what? The fair value. Okay, don't forget that we said that the current use, okay, is the fair value is presumed to be the current use, or the highest and best use is presumed to be the current use. But however, where there's evidence that market participants can use it for different purposes, then we also have to consider that in determining the fair value. All right. So that's all. Just pick the fair value, which is 6 million, and let the transformation cost 0.3. The transformation cost, let's it, and you get 5.7 million. The 5.7 becomes the fair value, and that's the highest and best use. Simple. Let's go and look at question. Let's at question 10. We'll go back to question 5, but let's look at question 10. Question 10. So question 10 is saying X. Let me write here question 10. X PLC owns several residential apartment buildings together with an adjacent park. The park was donated to SPLC by a rich local resident on the condition that the land be used as a park indefinitely and not be developed as a residential property. The fair value of the land as a park is estimated at 500,000. If it were to be developed as residential accommodation, it will have a fair value of 2 million. The restriction on the use of the park land is binding on SPLC, but if SPLC were to sell the land, the restriction will not be binding on the purchaser. The local water company has a legal right to run pipes under the land. If the land is developed as residential property, the legal rights of the water company would cause the developer to incur extra cost of 400,000 to protect the rights of the water company. SPLC does not intend to sell the park, or does not intend to sell the land park. Required, explain and estimate the fair value of what? The land. So if you come here, okay, we said the park land should be valued at its highest and what? Best use. And then the highest and best use is what? The use of a non-financial asset that will maximize the value, taking into account the assets being physically possible, legally permissible, and financially what? feasible. All right. Now, the rule is that we have two uses here. Okay. We have two uses here. Now, they said that we can have the land as pack, and if it's used as pack, it will be 500,000. If we develop the land for residential accommodation, it will worth 2 million. So you see, we have two main uses here. So we have to determine. So we have the land as pack, and then the land as residential accommodation. My handwriting, accommodation. So these are the two uses. Now, if we use the land as pack, we are going to have the fair value as what? 500,000. Okay. This thing, I have to put this thing down here so that I can write well. Yeah, so that'll be 500,000. There's no inner associated cost. When you come to the land as residential accommodation, we're told that the fair value will be what? 2 million. But the question further said that if the land is developed as residential property, then water company will run what? Water, or they will have to run water pipes under the land, and this will make the developer, or this will cause the developer to incur extra cost of what? 400,000 to protect the right. So we have to less, okay, the cost that they are going to incur, the extra cost. How much is the 400,000? What do we get here? 1,600,000. Now, so you see, this is the value if used for park, 500. If used for residential accommodation, 1,600,000. But look at something. Let me ask this question. They gave us, if you come here, he said there's a restriction. Okay. They said the condition, the one who donated the land, it says the condition is that the land, on the condition that the land be used as park indefinitely and not changed to residential. Somebody can say, if the condition is that we should use the land as park indefinitely and we should not use it as residential, then here we can't say the highest and best use is 1,600,000. Somebody can say the highest and best use should be what? 500, because 500,000, because using the land as residential accommodation. If you look at the question said is what? On the condition that they will use it only for what? Park, not as residential accommodation. So I'm sure it's coming to your mind that the fair value would have been what? Or the fair value is supposed to be what? 500,000, not the higher 1,600,000. Now, here the restriction, look at the restriction on the land. They said here, they said the restriction on the use, okay, the restriction on the use of the park land is binding on SPLC. But if SPLC were to sell, the restriction will not be binding on the purchaser. That's what they're telling you. They said the restriction on the use of the land will not be passed on when it is sold. Are you following? It's only the condition is that SPLC will use the land, okay, as park and not residential. But we are saying the question said that this restriction, okay, is binding on only SPLC. If S sells it, it will not be binding on what? On the purchaser. It will not be binding on the one buying. So the question is there really what legal restriction? Is it legally permissible for us to use the land as what? Residential? Yes, it is permissible. Why is it permissible? One, because he said the restriction, okay, of the land is only on SPLC, and if SPLC sells, it will not pass to what? The buyer. It will not pass to the what? The purchaser. And therefore, market participants will not take this restriction into account in arriving at the fair value. We are not going to look at this restriction and say there's restriction, so therefore we can't use it for residential accommodation. So we have to use it only for what? Park. No, this restriction will not be passed on to the purchaser. And we said fair value is determined from what? The perspective of the market, from the purchaser. So the market participant will do it from the perspective of the market. So market participant will not look at that restriction when I determine the fair value, because it will not be passed on when it's what? When it is sold. And by the way, it is not banned by law. Are you following? There's no total ban by law that the land cannot be developed for what? Residential accommodation. Okay, it's just some condition that the donator has with, or some condition that's attached, and therefore that condition will not be passed when it is was sold. Therefore, we are going to ignore that, and therefore conclude that therefore the highest and best use is what? 1,600,000. Therefore, the fair value of the land is 1,600,000. Let's continue. Let's also look at another question. Let's come to question 12. Let's look at question 12. Question 12 says, E and N Limited holds an asset that is traded in three different active markets. Relevant information about the assets in the three markets is as follows. So we have market A, B, and C. We have market share in percentage, 50%, 30%, and 20%. Then we have the entry price and exit price, transaction cost, and transport cost. Required: identify the principal and the most advantageous market, along with reasons thereof. Also calculate the fair value of the asset in these markets. Now, in this question, or with this question here, if you look at the question here, we have the entry price and the exit price. I told you the one that we use in calculating the fair value. We said we use what? Exit price in calculating what? The fair value. Don't forget that. Now, in this question, and also we've also learned that to determine fair value, let me see question 12. We've also learned that to determine fair value, we always use what? The principal market. It's when there's no principal market that we use the most advantageous market. Now, my question is, we have a principal market. We say principal market is the market that can absorb the greatest quantity, is the market in which you can sell the greatest quantity. Here there's a principal market. The principal market is donated by the market share. Okay, so market A is having what? 50%, B 30%, and C 20%. So it means that the greatest unit can be sold in market what? A. That's what you have to know. So if you look at the first requirement, we shall identify the principal market. So we say the principal market is what? Market. Yes, we said it's market what? Market A. Why is it market A? Because it has the highest share. Market A has the highest share. So it's like 50% of the total product can be sold in market A. So you see, we said for the principal, we look at the total quantity that can be sold in that market. So 50% can be sold in market A. And therefore, market A is the principal market. We identify the principal markets. Let's go, the second one, we should identify the most advantageous market. We said the most advantageous market uses what? The net amount that we are going to receive after we have deducted the transport cost and transaction cost. So let's look at that. Let's take market A, B, and what? C. So let's bring the selling price. And I told you selling price, we are going to use what? The exit. We learned this already, that the standard says with the exit price is what you use in determining what fair value. We look at this in the previous video. So here will be 29,500. Here will be market B will be 3,500, and market C will be what? 29,600. Then we less what? Transaction cost. So the transaction cost, market A is 700, market B is 1,500, market C is what? 1,000. Then we look at the transport. Market A 800, B is 1,000, and C is what? 400. You see, we have to less this ones here, and then the net amount. So 29,500 minus 700 minus 800. Yeah, I'm getting 28,000. Exactly 28,000. Okay. Then this one 30,500, 1,500, and 1,000. This one is giving me also exactly 28,000. And then the last one is giving us 28,200. So you see, the net amount, and all these ones are in what? They are in what? Monetary value. So the Ghana city here. So which one? So we can see, therefore, the most advantageous market is market what? Market C. Here 28,200, 28,000, and 20,000. So market C will give us what? A higher figure. Therefore, market C is the most advantageous market. Now we have two markets. Market A is the principal market. Market C is the most advantageous market. Which one are we going to use? The standard clearly states that we should do what? We should always determine fair value from the principal market. Don't forget that. We are therefore going to use what? The principal market, market A. So we go to market A. Fair value is equal to your selling price minus transport cost. So let's go to market A. What's the selling price in market A? Selling price in market A is 29,500 minus transport is 800. So when you less 29,500 minus 800, you get 28,700. So 28,700 is the fair value of the asset. Can you see? This question blends both the principal market and the most advantageous market. Now we have this question here, question 5. Where is it? Yes, question 5, very, very comprehensive. Yeah, it's on the highest and best use. It's on the highest and best use. We'll look at it in the next video. So in the next video, we're going to solve question 5, and then we are going to solve another question on the highest and best use, and then we'll wrap up Ifrs 13 with the valuation techniques, and then we are going to look at what the fair value hierarchy. All right, so we'll look at the valuation techniques and then the inputs to the valuation techniques. So once again, this is CN Professional Institute. If you want to be a chartered accountant, you want to be a chartered tax practitioner, you want to write any professional exams, ICAG, ACCA, CIT, whatever exam you want to write, you can join CN Professional Institute. You can enroll or register with us, and then we'll train you very well, prepare you adequately for your exams, and then you're going to pass on your first attempt. We also have scholarship opportunities available, so you can maybe contact us and see if you meet the criteria. And if you meet the conditions or the criteria, you can apply. All right, so don't forget we also have scholarship opportunities there you can take advantage of. I'll see you in the next video.